How's it going, everyone? It's Sam. Ethereum has been going nuts recently, with it spiking significantly on Monday with rumors of possible SEC approval of Ethereum ETFs. Today, I want to go through what it takes to retire on Ethereum, what it takes to make a significant amount on Ethereum, what you should be looking for. Like, if you think Ethereum is going to go up to a certain price, how much do you have to dollar cost average into Ethereum to hit maybe $50,000, $100,000, $250,000 years down the line? Also, I decided just to make this a mammoth video, we're going to be doing the same thing with Bitcoin and with Solana as well. So this is going to be fun. This is going to be great. So we're going to go through a bunch of different scenarios. If you like this kind of thing, which it seems like a lot of people do, we get good views on these videos, let me know by telling me in the comment section. Another way you can let me know is by signing up for Margex, where you can trade Ethereum. You can actually trade Ethereum, the Ethereum chart on leverage without KYC. You don't need a VPN. Also, you can use it as collateral. So if you wanted to trade Bitcoin, for example, you can trade Bitcoin with Ethereum as collateral. And you can use the link underneath the video to get some discounts on the fees and to get some bonus rewards on fees. So you can use some of those extra bonuses to pay for the fees for the first, I believe it's 14 days. Now let's take a look at what it would take to retire on Ethereum. Obviously, Ethereum's price has just gone up very quickly over the last 24 hours. This is being shot Tuesday afternoon. I don't know when you're watching it, but Ethereum has gone up drastically. A lot of it is due to the thinking that we're going to have ETH approval. We have a lot of ETFs that are trying to possibly buy cryptocurrencies, right? We've seen so many get approved to buy Bitcoin. Maybe some of them are going to want to buy Ethereum. There's a race for AUM at all times by hedge funds, and they need to get more AUM to continue to grow. And how do they do that? Well, they perform well. And how do they do that? Well, they've got to buy things that have a lot of potential growth. And with the Fed possibly lowering rates here soon, or getting a little bit more dovish, risk on assets, higher risk assets typically do better. So Bitcoin and Ethereum and other risky assets typically would do well in this kind of environment. And that's what we've seen. Now, there's going to be a lot of volatility, let me be clear, but I think there's a huge potential moving forward. Now, I will say, I do most of these with Bitcoin because I think Bitcoin's a little bit less risky than every other asset out there in crypto land. Like, people are always going back and forth on Ethereum, whether there's going to be some Ethereum killer with Solana or layer 2s. So there's definitely more risk with something like Ethereum, but you can also see it be devalued or be counted out, right? Like, just the fact that no one thought that Ethereum ETF was going to get approved led it to bleed day after day versus a lot of other assets, whether it's Bitcoin or Solana. So sometimes you can get Ethereum at a good time and you can actually get quite the deal on it compared to some other cryptocurrencies. So we're going to look at a variety of scenarios here today, and I'm not going to tell you the price of Ethereum, right? I can't do that. So I'm going to show you how much you need to retire based on your assumptions of where Ethereum is going to be. Now, I'll kind of put a framework towards it, kind of give you my general thoughts on what I think is possible for Ethereum's price. But a lot of it's going to depend on you at the end of the day, where you think Ethereum is going to go, and then also how much money do you need to retire each year. And then we'll also go through some other scenarios, like if retirement's not even a question, like if you can only put a few dollars towards Ethereum, maybe each week, what will that mean? Like, will that be a significant amount of money? But first, we're going to go through the retirement scenarios, and I'll explain why you want 0.56 Ethereum as well. But let's start here. Some different assumptions. First of all, we're going to go through 5 different retirement scenarios. We're going to go from you want to spend $1 million a year. So you're going to spend a lot. Like, this is more than anyone needs. You can buy whatever cars you want, that kind of stuff, to $250,000. So you're still spending a lot. This is more than just about every family makes. This would put you in the top couple percent probably in income in the US. You could live like no one else, basically. And then traditional FIRE stands for financial independence, retire early. So we're going to assume in this scenario, you spend $100K a year, which is still a lot. Like spending $100K is significant depending on where you're at, right? Everyone's got a different scenario. But if you're in middle America, that's a lot of money. If you're living abroad, this might be a lot of money. If you're living on the East Coast or West Coast in the US, maybe this isn't enough. But that's why we go through different scenarios. Then maybe lean FIRE, where you are just paying for like just basic expenses. Maybe you live alone, or maybe it's just you and your significant other, and you don't have kids or anything like that, and you can live on $50,000 a year. Okay, great. We'll go through that scenario. And then coasting FIRE. Let's say you just want to stockpile as much Ethereum as possible for the next 10 years. Then you're going to wait 20 years after that, and you continue to get normal rates of return, like 10% compounded annual growth rate. And you just let the Ethereum sit there and grow for the next 20 years after 2033. Now, that might be a little bit riskier with something like Ethereum, because I think Bitcoin just in general, and maybe some, for example, some index funds have more staying power than Ethereum, but we'll go through that scenario too. We're going to assume 1% staking rewards as well. So maybe you stake a percentage of your bag, like not literally 1%, but you stake maybe 20% of your bag. The rest you just hold in some cold storage or something like that. And we're also going to assume that the ETH supply stays steady as well, like not deflationary, not inflationary. It's just going to make the numbers a little bit easier. So let's go through these different scenarios, right? I got a lot of assumptions out of my mind there. So let's talk about where Ethereum's price is going to be to start. It's impossible to know where Ethereum is going to go, but I think by 2034, 10 years from now, it's pretty bearish to think Ethereum is going to be just at $5,000. Now, that's not the worst case scenario. Ethereum could be zero in 10 years, right? But we're going to assume this is the most bearish scenario. So basically, you're going to assume that Ethereum grows a tiny bit over the next 10 years, but it's relatively the same size, right? Maybe 25% bigger than it is here today. Again, this is the bearish scenario. I'd say the slightly less bearish scenario, but still pretty bearish, is 15,000. I know that sounds crazy to traditional finance, 15,000 being bearish, but keep in mind that is only about a 4x from here, 4x from where we're at right now at 3,700. And yeah, that's a 4x over the next 10 years. A lot of people think we might hit 10 to 15,000 this cycle. So going 3 more cycles into the future, maybe this isn't the best case scenario for Ethereum. This would put Ethereum right around a $2 trillion market cap, right under 2 trillion. Then kind of I'd say this is more bullish than bearish scenario, is 40,000. Some people say this is like base case scenario, 40,000 per ETH, which is a 10x over the next 10 years. Okay, that's a lot better. Then 80,000, then 160,000. This would put Ethereum right under 10 trillion and then right under a $20 trillion market cap, just for kind of round numbers there. Now, how many Ethereum do you need to retire? Well, it depends on how you want to retire. Now, we're going to make a couple assumptions here too. We're going to use the 5% rule. So 5% rule is like the 4% rule. Basically, from traditional finance, you look at how big your portfolio is and you can take a percentage of it, a certain percentage of it. Usually use 4%, use a 4% safe withdrawal rate, and then your portfolio continues to grow even though you continue to do withdrawals. Now, there are all different variations of this. Some people say, like Dave Ramsey say, that's crazy. If the market averages 11% a year, you can take 10%. But that's not exactly true, because a lot of it comes down to sequence of return risk, which is above the scope of this video. But basically, if you take 10% and you average 11%, depending on the year, depending on what year, what the first year does, it can drastically impact the second and third year. For example, if you have a 100% gain that first year, and then it comes back down to average 11%, that's a much better case scenario than you have a 90% drop and then you go all the way back up to your initial amount. Because if let's say you have a 90% drop, you had $1 million, you have 100% or a 90% drop, you only have $100,000 left. And then if you need to pull 5% of that original portfolio, you sell $50,000 of that full $100,000. So you lose half of your portfolio in year one. So It really depends on your portfolio, which is why we don't try to make sure that the withdrawal rate is super close to the average rate of return. If that makes sense, I hope that makes sense. But you want to be more cautious. And hopefully, if you're retiring on Ethereum, hopefully you have other assets as well. It'd be kind of crazy to put all your assets into one cryptocurrency. Some people do that with Bitcoin, but generally I think people that do that with other altcoins, they go a little bit crazy because there's a lot of volatility. But we're also going to assume that you get 1% staking. That's why we're going to say 5% safe withdrawal rate instead of 4%. So let's get into the numbers though. If you want to withdraw $100,000 a year or sell $100,000 a year, you need a portfolio with that 5% withdrawal rate right around $2 million. $2 million worth of Ethereum, and at $40,000 per ETH, that would put you at about 50 Ethereum is what you need to retire. And some people would say you shouldn't sell any of this, right? You should just take loans against it, and then you should pay back the loans. I've seen people talk about that. That is riskier. I'm talking to a lot of people here, and I don't think taking loans against crypto right now makes a ton of sense, especially because a lot of people will probably do that during the bull market and then be wiped out during the bear market. So we're going to assume that you just sell off a portion of the portfolio. Then what if you're a little bit more bullish? What if you want to spend more money though too? So if you want to spend $250,000 a year and you think Ethereum is going to 160,000, you need 31.25. So that would be a lot of Ethereum. That would be worth a lot in this scenario. Keep in mind though, even if we didn't get up to 160, but we just went up to 80 and you had 31.25 Ethereum, you're still going to be very wealthy or very rich, right? So even if we don't get into these upper scenarios, if we just get a good return, I think we'll be happy at the end of the day. If Ethereum's at 40,000 or 50,000, 760, I think most of us will be happy with that. But what if you got a little bit more aggressive with the withdrawal rate? So instead of taking 5%, what if you took 6%? Well, let me reload the page here. It's freaking out. But instead of needing, let's say, 25 Ethereum, instead of needing 25 Ethereum at $40,000, you would need Now, what if we got a little bit more aggressive? What if we did a 6% safe withdrawal rate or 6% withdrawal rate instead of a 5%? Well, instead of needing 50 Ethereum in this scenario, $40,000 per Ethereum, and spending $100,000 a year, you need 41.75. Now, the drawback to this is if there's a lot of volatility or if Ethereum doesn't perform as well as we think, well, you could run out of Ethereum more quickly. But that's just kind of for your own numbers. If you want to do this, you can always withdraw a little bit more aggressively, but just know there is more of a chance then that you run out of your Ethereum. Now, let's move on. A lot of people can't go and buy 62 Ethereum right now, for example, because the price of Ethereum has gone up. Keep in mind, I did this throughout the entire bear market as well. Right now, the cost of 62.5 Ethereum is not 96,000. This was the price about a year ago, maybe even less than that. That might have been about 8 months ago. It was $96,000. Now the price for that same amount of Ethereum is 193,000. You can go through the charts. So you can compare these two. Fatfire, for example, where you think Ethereum is going to be 15,000 per Ethereum. That will cost you about $1 million now. It used to cost you $516,000. But the key is to dollar cost average, to buy when there's blood in the streets, not when Ethereum's pushing up on everyone excited about an SEC approval and that kind of thing. For example, the cost during the bottom of the bear when no one wanted to buy any Ethereum, even if you didn't time it perfectly, but you bought around 900, instead of being now $154,000, it was $45,000. So it was much cheaper. It was a fourth the cost of what it is now. So if you dollar cost average over time, especially during bear markets, you do quite well. And even if you do it from cycle to cycle, Let's say you bought back in the bottom of the 2018 bear market. Back then, Ethereum fell down to $82. So a $40,000 price, or the cost of this 50 Ethereum that would allow you to retire traditional fires, spending $100,000 a year at $40,000, instead of this, what is it now, $154,000, it was just $4,000. Okay, so that's great to hear, but again, for some people, even if they could buy at $82, they may not be able to buy $4,100 worth. I get that. And you want to still stay diversified. Like, it's not usually good to feel like you need to put all your assets into one, or all your net worth into one cryptocurrency. So, like, what is the barrier? Like, what gets you above the average person on Earth? We're lowering the stakes a little bit, because I realize that this is hard for a lot of people to retire on one asset. Like, not too many people can go buy $150,000 of Ethereum, and that's even if it 10x's, that's when you can actually retire. So not too many people can do this kind of thing. But what would you expect, right? We're talking about retiring in 10 years off one asset. Like, this is not easy to do. Even if it 10x's, you still need a lot of that asset. So what puts you over the edge? What puts you further ahead than the average person on Earth? Well, right now, the Ethereum supply is around 120 million. The supply in 10 years, let's say we assume a 1% decline in the supply each year, because we actually see Ethereum being burned, and we continue to see the population grow slightly each year on Earth. Well, that means the ETH per person goes down to 0.012. And a lot of people, a lot of crypto investors have a lot more than that. So the actual supply that's available is much lower. The average person could probably only buy a tenth of that, maybe a hundredth of that. So, I mean, we're talking about the average person being able to buy very small amounts of Ethereum. So if you have 0.02 Ethereum, you're already doing better than most people will ever do in terms of Ethereum accumulation. But let's go through a couple of different scenarios, okay? What if you want to dollar cost average? What if you didn't want to retire, but you just want to make a lot of money? Okay, let's assume Ethereum hits these different numbers, the same ones that we talked about before, 5,000, 15, 40, 80, 160,000, and you want 10K. Well, right now, if you think Ethereum is going to hit 5,000, you need to put in about $7,400 worth of Ethereum to make 10K, or to get to a $10,000 portfolio. If you think Ethereum's going to do about a 4x from here, going up to 15,000, well, you need about $2,467. If you think Ethereum's going to 40K, you need 925, all the way down to, if you thought Ethereum's going to hit 160,000, all you need is $231. That's a good return right there. That's a 40x, more than a 40x from here. But what if you want 50K or 250K? Well, you can pause the video, you can take a look at it, or I can just tell you, if you want 50K and you think Ethereum's going to go to $40,000, you need to start with about $4,625 worth of Ethereum right now, which is the equivalent of roughly 1.25 Ethereum. Actually, it's exactly 1.25 Ethereum. What if you want 250K? Well, assuming you think Ethereum's going to hit 40K, you need about $23,125 worth of Ethereum right now. Okay, that's still hard. Getting those numbers is difficult for most people. So I want to show this little DCA example. Let's say you just dollar cost average for the next 20 years into Ethereum. Ethereum stays around, right? It continues to appreciate. We're going to say 15% a year. That's a good amount of appreciation. Now, in bull markets, we see a lot more than that. We've seen much more than that for Ethereum in the past. But let's just say that we're kind of in this mid scenario where it outperforms stocks and it outperforms real estate slightly maybe, but it's not exploding, right? It's not going up 50% each year, something like it's done in the past, right? So at the end of this time, at the end of the 20 years, Ethereum is still only worth less than half of what gold is worth today. So it's around a $7.3 trillion market cap. Let's say you invest $40 a week, $40 a week for the next 20 years. Okay, so that's a long time horizon. that would buy you 0.56 Ethereum today. That $2,080 that you invest, we're just going to assume that's the same price the whole year. It appreciates 15% each year. We're going to assume that by the end of this time, you can buy about 4.08 Ethereum. At 15% appreciation for the next 20 years, that puts Ethereum around $60,000. So this 4.08 Ethereum times $60,556 puts you right around $250,000 worth of value in Ethereum. Now, again, I'm not telling you to necessarily do this. Some people want to invest in Ethereum now, but maybe in 5 years, maybe Ethereum's not around. Maybe they want to invest in Solana or a layer 2, or maybe they just want to stick to Bitcoin, or maybe they want to go invest in meme coins. I'm not here to tell you that you should buy Ethereum. I'm just here showing you some of the numbers. If we see appreciation of 15% and you just dollar cost average for the next 20 years, just blindly throw $40 every week at it, 220s, right? You save one meal out a week, or you go get a job that pays $20 an hour, do 2 hours of work, something like that. And we continue to see appreciation like this. You can make a significant amount. Now, this doesn't account for inflation. Maybe inflation's 3% and Ethereum actually does 18% returns. And then this is inflation adjusted, this 247,000. Maybe we get 15% returns and there's 5% inflation, right? At the end of the day, it just comes down to your own assumptions. Where do you think Ethereum's going? Where do you think the economy's going? What do you think inflation's going to be? What can you actually invest? This is just a fun numbers video that can maybe shed some light as to what your goal should be. And I think at the end of the day, all these videos where we say you need 1 Bitcoin, you need 0.02 Bitcoin, you need 0.56 Ethereum, all these at the end of the day are fun, right? They're fun because it gets you thinking about stacking goals. Just like when you go and bench press, I've said this before, but when you go and bench press and you're at 195 pounds on the bench press and you hit 200, does anything drastically change in your body? No, but you're probably thinking for weeks before you hit that 200, like, I want to hit 200, I want to hit 200, I want to hit 200. Just like you might be saying, I want to hit 1 Ethereum, I want to hit 10 Ethereum. When you hit that number, it's not like all of a sudden everything drastically changes. It's just another notch. It's another milestone. But then comes the next one and the next one and the next one. And I think it's very similar, these two scenarios. Just like if you run a 5-minute mile, is there really much difference between a 5-minute and 5-second mile and a 5-minute mile? Not necessarily, right? It's not like your life changes. Just like if you hit 10 Ethereum versus 9.4 Ethereum, I don't know how much your life really changes, but I do think this is important to watch videos like this, to think about this kind of stuff, because it keeps you on track. It keeps you trying to stack more, to make good financial habits, and to make sure, that you continue to invest. Instead of buying that, that really nice golf cart, you buy like a slightly used one, and then you buy some Ethereum maybe. I don't know. It depends on your own situation. Okay, now what if you want to retire on Bitcoin? We're going to make some assumptions. They're going to be slightly different. We're going to assume, just for the heck of it, we're going to assume different cost of livings, different goals. So instead of just $100,000 or $250,000, we're going to assume this is more based on actually where you live. So the cost of living in the US, somewhere around $70,000. It depends on where you're living, but like that's the average price that people pay each year from what I could find, like what their annual expenses are on average. We're going to assume on lean fire, you actually spend less than the cost of living, like about 85% of the cost of living, because you don't have to pay for certain things that people that work have to pay for. Like maybe you can cook at home a little bit more. You don't have to pay for gas as much. Maybe you have 1 car instead of 2 cars, that kind of stuff. Traditional fire, we're going to assume isn't the low cost of living that you typically have. It's that you want to retire and you want to spend a little bit more money. So it's actually 50% more than the cost of living. So in this scenario, you're going to spend $105,000. In fat fire, we're going to say that fat fire is 2 times what traditional fire is. Then filthy rich fire is 10 times the cost of living. So instead of spending, $1 million a year, you're spending 10 times the cost of living. We're also going to look at some different places. We're going to look at Australia. We're also going to look at Mexico. What are the cost of livings there? How much Bitcoin it would take to retire? Now, again, it comes down to your assumptions for where you think Bitcoin's going to go. It depends on your safe withdrawal rate as well. We're going to have Coasting Fire be the same thing. Like you save up the next 10 years, and then after this 10-year period, you just get 10% compounded annual growth rate after that. And we're going to assume the safe withdrawal rate is 4% instead of 5%. There are no staking rewards or anything like that for Bitcoin. Now let's go through the different scenarios. Now, we started with $100,000 Bitcoin. Similar to the Ethereum example, I think this is not completely the worst case scenario because, I mean, Bitcoin's still around. It's not zero. I think that's worst case scenario. But $100,000 Bitcoin in 10 years, I think would be pretty bearish. Now, moving up $250,000 Bitcoin, I think a lot of people would be pretty happy with a 4x over 10 years. That's really good in traditional finance, but still, I think that's pretty low for crypto. I think 500K is kind of base case scenario. That wouldn't put us at a very large market cap still. Like that would be well below gold. Even now, that would be well below gold's market cap. $1 million would probably be right around where gold's market cap is in 10 years. And that depends on what gold appreciates over the next 10 years. But $1 million Bitcoin is where a lot of people think we'll be by the end of the decade or 10 years from now. $2 million Bitcoin, I think, isn't the most bullish case scenario. Some people are looking at hyper Bitcoinization and they're thinking we're going to be at $10 million Bitcoin, $50 million Bitcoin. But let's just say Bitcoin doesn't take over everything, but more and more institutions buy it, pensions buy it, nation states buy it. It's at $2 million. Okay. What would it take to retire? Well, we need, in traditional FIRE, we need 25 times this number here, this 105,000. So it's going to be a significant amount. We need over $2.5 million worth of Bitcoin, which at 500,000, that would make us have to accumulate about 5.25 Bitcoin. Again, this is retiring on one asset over 10 years. So it's still not like you can go put $1,000 into Bitcoin and retire in 10 years, most likely. So just keep that in mind, right? We'll go through some different scenarios like what you could get if you dollar cost averaged over the next 10 years with more realistic numbers maybe. And we'll look at like if you just want $10,000 20 years from now, or 10 years from now, like how much would you actually have to put in? But let's move on to the next example in FatFire. Let's say you want to spend 3 times the cost of living, the average cost of living in the US. You need about 10.5 Bitcoin if Bitcoin hits 500,000. If Bitcoin hits $1 million, well, you'd need about 5.25 Bitcoin and so on. You can pause this if you want to look at it more. But what if you were in a different country? I didn't know this until this year, but Australia actually has a lower cost of living than the US. The cost of living apparently, the average cost of living is $51,600 US for a family of 4. Now, I think a lot of this comes down to how the averages work out. Like coastal region in Australia is going to be more expensive, but mixed with the lower cost of living areas, it might bring down the total cost of living. But that's true of the US as well. So cost of living for Australia is right around $51,600 on average. Lean fire then, so 85% of that would be about 44,000. Traditional fire would be right around 77,000. And then fat fire, 154. Filthy rich fire, 516. So in this scenario, if you want to retire in Australia, based on the average numbers, you need under 4 Bitcoin if Bitcoin hits $500,000. That's pretty good, right? I like that. Less than 4 Bitcoin, it's much better than 5.25. So maybe you want to retire in Australia. But there are lower cost of living areas, and there's even lower cost of living areas than what I'm about to show. But let's go to Mexico. Mexico, cost of living, $35,000 for a family of 4. Lean fire would put you right around $30,000. Traditional fire, $52,000. Fat fire, you could live like a king for $350K a year. So if you think Bitcoin's going to go to 500K, you need about 2.61 Bitcoin if you want to spend $50,000 a year. Okay, it's easier. It's not easy, but it's easier. Easier than this 5.25 here. So let's move on. How could we do this better? How do we get a hold of this Bitcoin? Well, you dollar cost average at times when the price isn't as high. For example, the cost today, actually this is the cost as of one of the last videos I made, Bitcoin was right around 57,000. I think this is literally like a week and a half ago, I made a video kind of talking this through. I changed some of the numbers and scenarios, but it costs $57,000 per Bitcoin. Now it's $70,000, so it's getting more expensive. But in this scenario, it would cost $300,000 to get this 5.25 Bitcoin. Now it's higher, $70,000 per Bitcoin. So instead of $300,000, just a few weeks later, it becomes $68,000 more expensive to retire. Now, the key is to dollar cost average, buy in times of fear. The cost at $74,000 was much higher. For example, like if you have just bought here at 57, if you had dollar cost average, it was significantly cheaper than we were at 74. But 74 will be significantly cheaper than when we're at 100. It just becomes more expensive over time, and there are times where we dip, but generally dollar cost averaging is the best way to go about it. If we look back, to October, mid-October, it was half as expensive. Bitcoin was at $28,500. So instead of $380,000 or $350,000, whatever the cost is now to retire, to get to that 5.25 Bitcoin, it only cost $150,000. Now I realize that's still a lot, but you can go even further back. What if you did it at the bottom of the bear market? That 5.25 Bitcoin would have cost $81,000. If you had gone back to the prior bear market, okay, that would have cost $16,800. $16,800. So you could have bought 5 Bitcoin for the price of a used car 6 years ago. Now, what if you don't want to retire? What if these are still just, the numbers are too big? Okay, maybe you want to hit a certain goal. Maybe you want to hit 10K or 50K, or you want to hit 250K. It again comes back to your assumptions, but let's say you think Bitcoin's going to hit $500,000 and we're at $70,000 now. It would take you about $1,400 now to get to 10K. If you think you want $50,000, it'd take about $7,000 right now to make $50,000 if we go up to 500K. If you want 250K and you think Bitcoin's going to go up to $500,000, well, you need half a Bitcoin, so you need about $35,000 worth of Bitcoin. I realize that's still a lot though. So what if you just dollar cost average? What if you bought $50 a week? $50 a week for the next 20 years. Bitcoin appreciates, let's just say on average, 15% a year. So similar to that last example with Ethereum, 15% a year. That would put Bitcoin right over $1.14 million in 20 years. Okay? $1 million Bitcoin in 20 years, which, I mean, this is a 10-year example. And this is a slightly bullish scenario. For some people, they might say this is base case or even bearish. But let's say it takes 20 years to get there. 20 years. But you invest $50 a week diligently, week after week, you get to about 0.27 Bitcoin, which is worth about $309,000. So not bad, not bad. That's still a lot of money, $309,000. Even 20 years from now, it's not going to be what it's worth today. But this is a good sum of money. Of course, you probably want to be investing more on top of this. Like, this is not what you'll invest overall. Hopefully, that's not what you invest overall if you're watching this channel, because most people watching this channel are investing, making a lot of money. Hopefully you can figure out ways to invest outside of this too. You can invest more than $2,600 a year, but maybe this is part of your plan. Maybe you invest $5,000 a year in a 401k. You buy a rental property. You also buy $2,600 worth of Bitcoin. I realize for some people that sounds really difficult now, but if you work at it, you can definitely get there. You can invest 5 figures or more each year moving forward, right? And sometimes it takes some time to get there, but you can definitely do it. Now let's go to Solana. Okay, so the number for Bitcoin, how much Bitcoin you need, comes from this right here, 0.04. That is the first step if you wanted to get to this $300,000. Just like we did that with Ethereum, same thing with Solana, or same thing with Bitcoin. But let's move over to Solana, and we're going to do some different assumptions. Again, we're going to go back to that first example, 50K, 100K in annual expense of 250K, $1 million. We can standardize it if you guys want, but I kind of like switching it up a little bit. Let's go through some different scenarios where you do get staking rewards for Solana, just like Ethereum. We're going to say that the bearish scenario is $250. Keep in mind, Solana is about 177 right now. So $250 in this bearish scenario, $500 in the slightly less bearish scenario, but still bearish, $1,000 per Solana in kind of the base case scenario, 2,000 and then 8,000. We're going to say fully diluted market cap goes up to 2.6 trillion in the most bullish scenario. How much would it take to retire? And we're not going to get into like inflation rates for Solana and everything like that, but we're just going to assume the fully diluted market cap, okay? So $2.6 trillion is the fully diluted market cap in the most bullish scenario. You need only 250 Solana to retire if you want to spend 100K a year. That's crazy. 250 Solana is all. But that's, again, if Solana gets up to $8,000, which is a nice gain from here. 8,000 divided by 177, that would put us at a 45x gain for the next 10 years. So very bullish. But you can see if we get that 45x return, it doesn't take a lot. I mean, 250 Solana is nothing to scoff at, but we're not talking about having to save and invest hundreds of thousands of dollars right now. Now, what if we're a little bit more aggressive with a 6% withdrawal rate? Well, it'd obviously take less. So instead of that 5% withdrawal rate, you take, instead of 2,000 Solana in this $1,000 Solana scenario, it would take about 1,670. Okay? So significantly less. Let's move on though. What's the cost of that? Well, with Solana around 170, which was just the price like as of yesterday, it would have cost about $340,000 to buy this 2,000 Solana. Okay, so that's nothing to scoff at. That's a lot of money. That's a lot of money. So let's move on to the cost 6 months ago. 6 months ago, 7 months ago, Solana was a lot less expensive. I mean, we're talking about literally a $21 crypto. Now, this is actually from a little while ago, so it might be like 7, 8, 9 months ago. But just in 2023, not even cherry picking the time, $21 per Solana. It's crazy. It's crazy. But $42,000 is what it would have cost to get 2,000 Solana. Wow, that is a lot more affordable than 340K. During the bottom of the bear, when Solana was $9, it would have cost $18,000. $18,000. Now, that $18,000 would have already been worth a lot. So we're talking about 2,000 Solana times 177. You would have $354,000 today if you bought $18,000 worth of Solana during the bottom of the bear. And what if you bought during the bottom of 2020? Let's just say $1, right? Solana basically came from nothing, but let's say it was $1. Well, it would have cost about $2,000. Okay. So definitely doable. Now, on the Ethereum, on the DCA example, and on the Bitcoin example, I kind of did the same thing, right? I assumed 15% growth a year, investing different amounts. Honestly, it would be the same if you base it on Solana, but you assume the same growth rate of 15%. It would just be a different total amount of Solana that you'd buy. So for Solana, if you want to buy, let's say $40 a week, and you assume 15% compounded annual growth rate, you start the first year by buying about 11.75 Solana. And then you just continue to grow over and over and over, and then you'd eventually be left with about 250,000 in this example. Or if you want to invest, instead of $40 a week, you want to invest $50 a week like we did in the Bitcoin example, you would be left with about 308,000. Just depends on where you think the price is going, how much it appreciates, how much you can actually invest as well. So in that scenario, maybe you start with 10, 11 Solana that you can buy each year, but by the end, you have a significant amount. After 20 years of appreciation, obviously Solana would be worth a lot as well, and you do pretty well for yourself. Now, if you want to make $10,000 or $50,000 or $250,000, we could run those examples too. Let me know if you want those down below in the comment section. I kind of like doing those, but they're very similar. It just depends on your assumptions, and we kept the assumptions the same for Bitcoin and Ethereum, and we could do the same thing with Solana, but I'm not sure it's necessary. Let me know your thoughts though. Where do you think Solana is going to be in 10 years? Where do you think it's going to be in 20 years? Where do you think Bitcoin and Ethereum are going to be? Again, if you do want to trade these assets, you can trade them over on Margex. So a cool thing that you can do with Margex, this is something that I'll probably make a full video on. I have not seen any other exchange do this, but you can use different forms of collateral. So for example, you can trade Bitcoin with Caspa. You can trade the Bitcoin chart with Solana. You can trade the Bitcoin chart with Ethereum. So if you want to trade an easier chart, there's a lot more liquidity for Bitcoin. I think it's easier to tell where Bitcoin's going, or maybe you just think Bitcoin dominance is going to go up, right? But you want to trade in a different asset. Maybe you have a bunch of Caspa, or you have a bunch of XRP, or anything like that. You can actually amplify your returns by trading on leverage. You can also amplify your returns by using different forms of collateral. Let's say Bitcoin goes from 70,000 up to 140,000, okay? So it doubles. But Solana goes from 170 to, what's 4 times that? 680. So it does a 4x. If you use Solana as collateral, you're going to make a lot more than if you use Bitcoin as collateral or use USDC or USDT. A lot of exchanges actually use USDC and USDT as collateral, which is a little bit better if we're in a bearish market and you're going long. But in a bull market, you can make a lot more by putting up crypto as collateral. For example, in this scenario, let's say you did 10x on Bitcoin and Bitcoin goes in doubles, right? If you had USDC, you would have a 10x. So you put in 100, you get 1,000 basically. But if you put in 1 Solana, you'd have 10 Solana, right, on that 10x trade. But your Solana is also worth 4 times more in this scenario, which we're probably going to see some altcoins run. So you may want to put those altcoins as collateral if you think we're going back into a bull market. If you think we're going to go up drastically, like using those forms of collateral can actually amplify your returns a lot. So instead of a 10x, you could have a 40x, a 30x, a 20x. Now, if we go down in price and your collateral goes down in value, maybe that works against you. So it depends on your own scenario. It depends on your risk tolerance, but it's something interesting to think about. And it could make a huge difference during this bull run. Now, of course, only trade with money that you are comfortable with. Make sure you understand trading too. I have a lot of videos on my channel talking about leverage trading. Just look up My Financial Friend Leverage and you'll find them. Thank you so much for watching. I appreciate it. Let me know if you want me to do more of these videos in the future. Maybe I'll even chop this up for future videos. This is my first time kind of putting them all together, but maybe people want to see them separately in the future. Let me know in the comments. Thank you. I appreciate it. I will see you in the next video.